we had seen that the consumer, the customer side, they are not approaching mobile banking just due to one reason. They are saying security and the technology is not that upgraded. But on the other hand, technology is upgrading, apps is upgrading, mobile is upgrading. So it's just an excuse from the customer side, or it's true?
I don't think it is. Obviously, technology is something which evolves over time. I mean, 20 years ago, there were no ATMs in India. You had to go to a bank account to withdraw money. Today, there is nobody who ever goes to a bank account to withdraw money. In fact, many bank branches will not even give you money across the counter. They just point to the ATM which is around the corner. So these are changes that come in the process of getting used to a certain thing. And I'm sure in due course over the next 1, 3, 5 years, mobile banking will also become something which most people will adapt to. There is always that fear of risk when you're dealing with something which you can't physically see or interact with. It's so much safer if you go to a bank branch and do your transaction there, because when you are talking to someone, that someone is giving you some comfort and you know your things have gone right. But this is the world of technology. This is the 21st century, and you have all people will have to get used to it. So I think mobile banking, there are safeguards, there are obviously innovations that keep happening, but I think it is fairly safe to use mobile banking. But obviously security is something which people will keep working on. Whatever security levels are there today, there will be some genius somewhere who will try and hack it in some form or the other, and then there'll be some more innovation that we can make to try and but it's an ongoing process. I think it's safe to use it.
As we know that FDI is approved in pension and insurance sector, how much it is crucial for a housing finance company? Because sir, you are HDFC is dealing in both general insurance and life insurance. So how much it is crucial for HFCs?
I don't think it's crucial for anyone, but it is good to have a pension product in India. And even, I think more important than just a pension product, it is important to have a product which is tax efficient. I don't know how many of you know, but to my mind, a pension product, the way it operates in India is not tax efficient at all. For example, let's say you put in, for argument's sake, 1 lakh rupees in a pension product today, any pension product, and there is some tax benefit that you get on that 1 lakh. It's not significant, it's some small benefit you get. The policy provides that for 10 years the money is invested. So let's say it's a single premium product. So you put in just one payment of 1 lakh rupees. Or let's say it's a 10-year policy. So for 10 years you keep putting in 1 lakh rupees in each. So over a period of 10 years you deposited 10 lakhs. Now on that 10 lakhs there is some nominal tax benefit you got. It's not been a very significant benefit. The pension product provides that at the end of the 10th year you start getting some annuity. You start getting some money back in the form of annuity, which is effectively nothing but like a pension. Now when you get that annuity, the entire amount of annuity that you receive is taxable in your hands. Now what is that annuity? The annuity is nothing but the interest that is derived on the principal that you invested, plus the return of your own principal. So when you are getting back your own money, you are paying tax on that money, which doesn't make sense at all. So these are the kind of rules which need to be changed in the tax laws to make pensions more effective or more productive. I don't think it is crucial from a company standpoint, but from an individual standpoint, of course, it's very important to have a pension product. If you look at the Western world, everyone in all parts of the world, particularly in the US, they have a very, very good social security system, which effectively is not a pension, but is a social security system. If you look at the size of pension funds in the Western world, they're enormous. Who are the people? Who are these so-called foreign institutional investors who are investing equity into Indian markets? They are either mutual funds or they are pension funds. And a lot of this money is pension money. So a state teacher's retirement benefit of Texas, or state teacher's retirement benefit of Ohio, or whatever. So these are the kind of pensions where they have huge sums of money which they invest partly in the local market and partly in the overseas market. So from an individual perspective, I think it's a great thing to have a pension product. But there have to be amendments in the tax laws to make them more, investor friendly.
Good afternoon, sir. Sir, my question is with Kotak Mahindra and Yes Bank increasing their saving rate to 6%, why has HDFC not approached this policy? And my second question is, why are banks not promoting their swipe accounts? Because it will help the customers to get more interest from their account.
See, why the banks have only Kotak and Yes came out with this 6% product, to my mind, and it's nothing against any bank, is because banks which had a low CASA ratio, I don't know how many of you know how a bank operates. Banks raise money through three categories of deposits. One is current accounts, which is really businessmen's money. The second is savings accounts, which is accounts of all of us. And the third would be deposits, fixed deposits, which are for a longer period of time and where the interest rate is higher. Now, the success of a bank really evolves or revolves around increasing this current and savings accounts as a proportion of total deposits. So that is what is called CASA. Current accounts and savings accounts as a percentage of total deposits. The higher the CASA ratio, the more profitable the bank is. The lower the CASA ratio, the less profitable the bank is. So that's a simple fundamental rule you must understand. Now, banks which were low in the CASA ratio want more CASA deposits and therefore offer a higher interest rate on savings accounts. But banks which were high on CASA ratio did not offer a higher rate on savings deposits because already their CASA ratio was so very high. That is the reason. Sorry, you had a question.
So on one hand, post 2008, globally interest rates have come down, almost all the countries barring India. And on the other hand, in India, corporates are sitting on the mountain of debts. So these interest payouts are amplifying the fall in the bottom lines. So in the light of today's monetary policy announcement conveyed by you, isn't it high time that we start looking at some serious easing of rates?
See, any regulator, someone like an RBI, has always been ultra cautious. We have a very ultra cautious regulatory regime in the form of RBI. Inflation in India has been high. There are several reasons why inflation is high. There is not one reason, it's a multitude of reasons. So many reasons. The single biggest reason is the supply chain management, which is very important. So there are supply side issues which cause inflation. And those supply side issues cannot get rectified by keeping interest rates high. But at the same time, by keeping interest rates high, you restrict the willingness or the desire of people to borrow money, which then goes into creating further demand, which then itself is inflationary. So inflation has remained high in India. We had inflation which ran into double digits last year. Inflation numbers have steadily started declining, but not to the level that they would sort of satisfy RBI. Inflation numbers last came in at 7.24%. And therefore the likelihood of an interest rate cut in this credit policy, in my personal view, was low. Though a CRR cut was, I think, imminent because there is a huge shortage of liquidity in the system. The amount of money being borrowed by banks from RBI every day has been rising. On Monday, that was yesterday, there was as much as 1,46,000 crores of money that was borrowed by banks from RBI. So it's a huge amount of money that banks are borrowing from RBI. And therefore, some easing of liquidity by releasing the CRR, by reducing the CRR, would have, I think, been the more prudent thing to do. Interest rates, whether you reduce interest rates by 0.25%, 0.5%, is really not going to make too much of a difference, in my view. I still hold the belief, which I've said in so many forums, that you will certainly see lower interest rates in 2013. I would expect that by March itself, you will see a 50 basis points cut in interest rates, unless there is some eventuality which happens in the world, which we are not able to see today. For example, one of those eventualities could be a very sharp spurt in oil prices. See, one of the biggest constraints that we've had in India is our inability, or the fact that over the last so many years, we've not invested enough in oil exploration. And therefore, we don't have oil reserves. We don't have enough of oil reserves. And a significant portion of oil requirement, I think it's nearly 80%, is imported from overseas. So with so much of oil being imported from overseas and with oil prices becoming so much higher in the last 5 years, that has been the biggest problem that India has faced. Truly the biggest problem. That is the reason, one of the biggest reasons why the fiscal deficit has run higher, That is one of the biggest reasons why the current account deficit has remained high. That is one of the biggest reasons why the rupee has been so weak in the last couple of years. So if there was to be some problem, for example, in the Middle East where, let's say there is an attack on Iran by Israel, something like that happens, and because of that oil prices spurt, then inflation will also peak in India, will rise in India, deficit will rise, RBI will do nothing. But in the absence of anything untoward happening in the economy, my belief is that in 2013, interest rates will come down. Inflation may not come down to levels which are below 6% for sure. I would say around 6.5% will be the average inflation level for next year, assuming we have reasonable monsoon and there is no untoward calamity in the world which causes oil prices to go higher. But having said that, interest rates, this December period, I think it was unlikely that interest rates would be reduced.
Good afternoon, sir. My name is Amrut. My question is very basic. It's just that a couple of years back, we purchased a house for 16 lakh rupees, and the property prices in 3-4 months it shot up. And my broker told me that now the price of your house right now and the property around your house it's gone up to like 20-25 lakh rupees. But my question is that if property prices, as you mentioned, that since from 300 million to 600 million, there's going to be an increase in the urban population, and so the property prices will increase. The property prices are increasing at a much higher rate than the salary of my parents. So wouldn't that be a problematic part for the middle class?
It varies, this is something which varies from place to place. There are periods of time when property prices have been stagnant for a while, when suddenly there is an increase, there's a sharp increase, incomes don't pick up during that period. But if you take a longer term view, take a 5-year view, take a 10-year view, then these things even out. At the end of the day, why are property prices high? Property prices are high, 1, because interest rates are high, 2, because land prices are high, though that may not apply that much to Ahmedabad, it's more a Bombay phenomenon. So land prices are high, and 3, construction cost has gone high. Why is construction cost gone high? Because labor cost has become high, significantly high. With, there used to be a lot of people who used to come from some of the backward states in India, which are themselves doing well. So therefore, the number of laborers migrating to other states is reduced, and therefore labor cost has gone higher. So those are the reasons why the cost is high. I think the only solution to bring property prices lower, particularly I'm talking with reference to Mumbai, not with reference to Ahmedabad, is to really build on the infrastructure. If you create an infrastructure which is so very good, where you connect the northern part of Mumbai with the southern part of Mumbai through the sea with several inlets into the city, so you solve the transport problem, then you can permit buildings to go higher. Existing buildings which are 2-story and 3-story, and there are so many of them, and then go higher. And that creates supplies. Increasing supply will bring prices down. Like any economic theory, the price of any commodity is a function of demand and supply. Similarly, the price of a house is also a function of demand and supply. The more the demand, the lower the supply, prices go higher. The higher the supply, the lower the demand, prices go lower. So if you were to create the supply, prices would come down. But the likelihood of that infrastructure getting created is very, very low. And that is the reason why I say that, in my personal view, it is unlikely that you will see any mass-scale reduction in property prices. There could be correction of a pocket here and there, the prices have gone up too sharply, but any sustained reduction in prices, in my view, is unlikely.
So you said that subprime prices would not affect India, right? But don't you think the main reason for this is the cash component a buyer has to pay to the builder?
I don't think so. The cash component is added support that the lender has. So when I talked of a loan to value ratio of 65%, the 65% is only of the check part, the white part. I'm not taking into account any cash, because cash can vary from project to project. There are several projects where you don't have to pay cash at all. But having said that, I don't think that is the reason. The cash adds added comfort, but that is not the reason why the subprime crisis did not come to India. It was just very simple penetration levels. In the US, you had a mortgage to GDP ratio of 77%. 77% means that everyone who could possibly have taken a loan had already taken a loan. And then you had these large, huge balance sheets with massive trillions of dollars of balance sheets. And on those large balance sheets, those banks had to grow. Now, how do these banks grow on large balance sheets? If you're expected to grow 15% when your balance sheet size is whatever, $50 billion, how do you grow at 15%? You have to do riskier and riskier things to create assets. That is what caused the subprime crisis. In India, the penetration level is 8%. No one has to do anything silly. What created the existence of these interest-only loans? Interest-only loans, to my mind, was the single biggest reason why the defaults happen. That the person takes a loan. I have a house. I use my house as the equity. Against that, I raise money. 90% of the value of the house I take as a loan, and I use that money to go on a holiday to some place, and I spend my money. That is a kind of behavior or kind of thing that happened in the US.
Sir, I don't know if this is specific to Ahmedabad, but a lot of new properties that have come up here, they say that we have the property approved by the bank and that they would give the loan at an LTV of 100%. Now, how does that function? Because I do not understand. And basically, I also understand that here LTV is followed anywhere around 80 to 85%. So
I don't think anyone, to my mind, nobody will give you a 100% loan unless Irfan, you are aware of something.
If there is a cash element, then they go by the value and they take a supplement agreement, raise the value of the property, and then they work out indirectly. But this is in very few projects, and not many lenders would be doing it.
So what he's saying is that supposing the value, the disclosed value, let's say is 10 lakhs, and there's a cash element of 2 lakhs or 3, let's say 5 lakhs, theoretically I'm saying. So normally one would give 80% maximum of 10 lakhs. So here there is another agreement which is done with the builder, which is not a property agreement, but it's for something else. Supplementary agreement for 5 lakhs. So then the lender considers both the 10 lakhs and the 5 lakhs. But then what that supplementary agreement is, I don't know.
Some improvements.
We have been talking about 10% penetration.
8%.
How do you extend the reach of housing finance to those who need it the most? Ideally, those whose income is less than a lakh.
See, there are low-income housing projects that are coming up. If you see, there are, after the 2008, I think it's actually a very interesting question. In 2007, 2006, 2007 was absolutely euphoric times. Everything was growing at a great gun. Stock market was at 21,000 index, 22,000 index. And in that period, everyone was feeling rich and feeling confident. Jobs were high, companies were paying large bonuses, and everyone wanted expensive, more and more expensive properties. So no one wanted to buy small properties. A person who would have normally bought a 2-bedroom apartment wanted to buy a 3-bedroom apartment. That was the kind of situation prevailing. And the builder community took advantage of that, saw that this was happening, and therefore their focus was only on building those very expensive properties. So there was no focus on building small properties of 700 square feet or 600 square feet. They were not interested. But it was so much better or so much more profitable for them to build a 3,000 or a 4,000 or a 5,000 square feet apartment and then put Italian marble and whatever else you put in, and therefore you could sell it at a very fancy price and at a very fancy margin. Also, that was a time when equity markets, as I said earlier, were doing very well, and all these builders, many of these builders wanted to raise money from the equity market. So they all wanted to do IPOs. And in the process of doing IPOs, investment bankers really, I think, took advantage of the situation and misled both the investing public and builders. So they persuaded builders to create a land bank. So a builder would go and buy a piece of land. He would pay 20% for that land today. Balance 80% would be payable over the next 1 or 2 years. Then he would go and buy another piece of land somewhere else. Again pay 20% for that. Then buy a third piece of land somewhere else and pay 20% for that. And then the time came to pay the first installment of that first property which you had bought. And by that time, the crisis hit in 2008, and there was no money to pay. So that is what caused the problem for the real estate sector. Since then, things that, and the reason the investment bankers were telling builders to buy land was the land was being valued in a very in an absurd manner. So the way it was being valued was the investment banker would say that on this land you would build 10,000 square feet of property, and you would be able to sell it at X rupees a square foot, and therefore the total value of that property would be so much, and your cost of construction would only be so much, so the value of that land was 5 times what the real value of that land as land really was. So it was absurd valuation that was going on. Then 2008 crisis happened, builders didn't have money to pay back land, there was a serious financial shortage in the system, and post 2009 what we have seen is that for every high-end project that builders have done, the same builder also does a low-cost project. Because he knows that in a crisis, the low-cost properties will sell, the high-cost properties may not sell. So therefore there is a move towards more conservatism. Secondly, the land buying spree nonsense which was going on in 2006-07 has come to a halt. No one is going today and buying land and aggressively pushing up land prices. So there are projects and there are apartments that you can get all over India which are really low-cost housing, where you can get houses at 500 square feet or 600 square feet area, and prices are not high.
Market share. These are rates.